All right. Oh, okay. Cause I was looking at once it hit that third rise, I saw I would have considered all that up there was consolidation until it started that third rise again at 1.5500.
About right here.
Yeah, somewhere right here. I would have said all that back there is consolidation. I would have just marked all that consolidation.
Um. Okay. Let me break. Okay. So this all comes to
That's
down
how I would have
basically.
read it.
Yeah. I mean that's understandable. You know what I mean? As a person, I guess not knowing too much about price action and candle structure. Yeah, that would be considered like a consolidation if you really want to say because here's your low. I mean, here's your high and here's your low, and price is basically trading it within that range. So that is a small consolidation.
Right.
But if you see this right here, this structure, let me draw the line again.
I know you're not supposed to trade in the when the EMA is on the candle.
And that's not necessarily true. Not necessarily true. I mean, like you want to be looking for a position, honestly, when it's in a consolidation, because what's going to happen is you're
Right.
going to catch the stronger move. So if you see this right
It's
here, you
gonna eventually make a move.
right, exactly. You just have to be on the momentum side of it. That's the thing. So this line right here shows a lot
Yeah,
of
you just gotta be on the
market
right side.
structure. Yeah. So as you see, like price was rejecting off of it, but here's your breakthrough on this
Yeah.
single candle right here. Here's the retest of it on this pin that pulled back. And this is what I'm going to cover on the ECAD trade for you guys. When y'all see a candle like
Okay.
this,
Okay.
it pins to the low the
So
way
you
you
see
want it
that
to
you
go,
see
but
that push
pull
up with
back.
arrow is right. You see a little push up right there. Was that the test buyers?
Was that what? What'd you say?
Because I noticed when they keep hitting the high and the low like that, they're testing the buyers.
Yeah, I mean they're accumulating orders and testing people's basically, just basically accumulating orders and equity. Um,
They're trying to get as much money as they can before they make their real move.
exactly what you said. So, like when it comes to
All right.
consolidations, you just got to know a little bit about price action and market structure. And market structure is here's a bullish run off of this reversal right here into the small consolidation, which was like a bullish pennant or flag. Bro, what are you eating? And then here's your breakout. Now, after this breakout, after a structure point is broken, there's always a retest to it, and that's the retest to it right here. Okay, and that failed above that structure point and shot up again. So basically, what we're looking at in this current market is this structure right here. Let me draw some lines real quick. This structure, uh, this structure.
All right. That's the new structure right there. I see that as the new structure.
Exactly. You got to see that as a new structure because if you draw your trend line, you're going to see higher highs and higher lows, which
Right.
tells you it's still trending up. You see what I'm
See
saying?
what messed up was. See what messed was. I thought breaks was hot. You know what I'm saying?
I'm sorry, you was cutting in and out. What'd you say?
I was saying, I thought the breakout was of the structure, but you telling me that breakout is pretty much the structure is pretty much before the breakout.
The structure is before when? Your line's cutting in and out.
Yeah. I'm driving through a bad area.
Oh,
He
Um,
okay.
said it's going into the time for the newbies.
Yeah, I'm about to get it to you, man. Hold on, AC. I'm gonna come back to you here in a second, bro. Let's I'm gonna help Sheena and them get set up and things
all right.
quick. Um, how do you all have your charts set up as far as like your indicators and things like that, Sheena?
That's what I need to do right now. Right now. I need to be able to save my template to go to each chart. So right now, I just set my candles up and my volume up. I want to put my MACD at the bottom. So,
do you use MetaTrader 4 or TradingView?
I tried to use TradingView. I opened up account there, but it just keeps spinning. It just keeps spinning. I can't do nothing.
Really?
Yes.
We got to get you on TradingView. I like TradingView.
I'm trying to. I like it too. I have an account and everything. It just keeps spinning.
You might just have to contact support and see what's going on with them. They might have to refresh your shit.
I did.
Really?
Yeah, I ain't got no response yet.
Oh, man.
I just opened up account about 2 weeks ago.
Okay. Well, I'm going to show you on TradingView, but it's pretty much the same way on the MetaTrader 4, but you just have to set it up.
Okay. Hold on. Let me see if I can. I didn't know you wanted me to do TradingView. I might log in TradingView real quick.
I mean, I can do MetaTrader, I believe, too. Hold on.
Okay.
And while you're doing that, it's Alicia. While you're doing that, can you make sure that you're telling us where you're clicking before you click? So, because sometimes y'all click a little fast and we don't know what you clicked on.
Yes, ma'am. I sure can. Are you on MetaTrader 4 as well?
I'm on TradingView right now,
okay,
but I can go to MetaTrader for it if I.
No, I'm trying to. Let me see if I can get on here. And maybe you could tell me what I ain't clicking or doing right. The reason why it ain't coming on.
Okay.
I'll show you.
Did you sign up with like your Facebook account or something?
No, my regular email. I guess. Damn. Oh. Now I done forgot the damn password. All right. Okay. I guess I just have to do it on the MetaTrader. I got the MetaTrader 4 up.
All right. Let's see. All right. So to set y'all's charts up, Pearl, what are you eating, dude? No, get that out your mouth. Stop.
Is Pearl that pig?
Yes, ma'am.
Oh God.
He got a pig.
Yes.
And his name is Pearl. It's a boy pig named Pearl.
No, it's a girl.
Oh.
And the pig be listening for real.
Oh, he's smart as hell.
What?
Yeah, they're smart as hell.
Hmm.
All right.
Okay.
So on setting up your charts, the first thing you all need is 2 moving averages, okay? I use, like I said earlier, periods of 9 and 18. Let me move this up.
Okay. So I'm going to go to it.
Hold on real quick.
Yeah.
Oh, there goes my phone. Just died on me. Damn, I was waiting on that call all day too. Hold on, guys. But I know I didn't forget it. There it is. Ooh, there it is. All right. So, adding your moving averages on TradingView, you want to just go to indicators right up here and just click on it. It's going to populate this box.
Wait. Go to where?
Indicators.
Hold on, let me make it bigger so I can see that.
It's to the right of the compare.
No, I don't. Is that on TradingView?
Yeah, this is on TradingView. I'm gonna show you on. I'll do it on MetaTrader as well too. I'm just gonna do TradingView right now. So you're gonna click on indicators, and it's gonna populate this box. Now you can just search for it. I just type in EMA, and it's gonna give you moving average exponential. You're gonna click on that twice, and it's gonna give you 2 EMAs, but they're both gonna be set to the period of 9. Okay, so once you click on that twice, you can close out of that. And then once you click over here, you can either double click on one of the lines, or you can come over here to the top left of the screen. And you notice there's 4 boxes right here. You see an I, a format, a plus, or an X. If you click on the format, that's when you're going to be able to change the width of it. You'll be able to change the color of it. You have some inputs to change the length of it and things like that. Now, like I said earlier, all you need is a 9 and an 18, and they're both exponential moving averages. Those are the first 2 indicators, okay? The second indicator I use is the MACD. All right, again, you can just go to indicators and then type in the MACD and then just click on it. And this is what it looks like. I use the MACD 4C because I like to know the strength of what's going on. A lot of MACDs will just have one solid color for this histogram. But if y'all notice, this one has, you know, like a darker and lighter green and a darker and lighter red. And what those colors are telling you is like the strength of the momentum of a trend. All right. So for instance, if you see this dark green, you're going to be in a sell situation or a bearish situation. All right. If you see a strong green, you're going to be in a nice, strong, bullish situation. It's the same thing for the red, except for the opposite. A dark red is a strong bearish trend. A light red is a weak bearish trend. All right. And the way you're going to use this, or the way I use it, is part of a triple screen method. Like I say, I'm a swing trader, but you can use this as scalping as well. And basically, all I do is, you know, like I said, I mark up my key levels, and then I begin to look from the daily chart. If you see this momentum right here, this is a light green momentum, right? So this is telling you, that looks way better. So this is telling you that you're still bullish. Not only that, your moving averages are you know, slanted up. That's telling you that you're still bullish. Okay.
I can't follow along because I don't have it on my screen to be able to follow along and see the green and the dark and the MA.
Yeah, can we do it? Can you tell us what it is on MetaTrader for? Because I don't have TradingView either.
Oh yeah, hold on just a second.
Okay, thank you.
Pull that up real quick. Let's see. I'm trying to figure out the last time I looked at my MetaTrader.
Don't say that.
I just like TradingView. Like, here's my thing. Like, I do all my charting on TradingView, but like, I'll take the order mobile. Like, that's what a lot of people are doing, actually. Where are we?
They're doing what?
We're charting on TradingView because they also have a iPhone mobile app, which is just killing the MetaTrader 4 mobile app as well. So like, we're charting on TradingView, but we're taking the trades on the MetaTrader 4 mobile app.
It says I've been locked out due to too many login attempts on TradingView.
Oh, that's okay.
Oh Lord.
So I need to get me a charger for my computer. That way I can get my computer back up and running.
Yeah. All right. I got a fresh chart. I can start from the beginning with you guys as far as getting you all set up. Cool beans. Let me.
I hope I don't need a new one.
All right, y'all see the screen?
Okay, it's coming up now.
Yes, I see it.
All right. So for you MetaTrader 4 people, hopefully y'all screen doesn't look like this because this is.
It does.
Oh man.
Take the grid off. Take the grid off.
Yeah.
How can we take the grid off?
Y'all haven't took the grid off?
My grid is still on there because I do use TradingView, but then I realized what you were doing with the exponential stuff, because I haven't paid for TradingView, I can't do that because of the indicators, or you got to pay for it. So
No. With you just have to delete. Like with the TradingView on the free version, you're allowed to have 3 indicators. So if you have any indicators on there, just delete them and then add whatever you want to add.
All right, I'll try that later. Go ahead. How you get these grids off of the grid lines off of here?
Hit Control G. You can hit Control G You can right click on the chart, click on grid, and it'll make it go away. But the simplest way is hit Control G.
Okay, got it.
All right, so this is what your all's chart looked like. The next thing you want to do is up at the top next to the auto trading button, you'll have 3 toggles. One is the bar chart, which is the current default mode. The middle one is candlesticks, which is the one you want. And then the third is the line chart, okay?
Right.
We want the candle bars. So you're going to click on that. Once you click on that, right click on your chart, go to properties, and then this box is going to pop up, okay? And you're going to change a few settings on the candle bars, okay? Your background, you can leave the same unless you want to change it. Your foreground, you can leave the same. All that stuff, you can leave the same. The only thing we're changing is the bar down.
And the bar up.
And the bar up. And then you're going to also change the bear candle and the bull candle, though. So the bar up, we can leave lime. Bar down, you can put as red. The bull candle, you want to put back as lime. And then the bear candle, you want to do red. And then just hit OK. Now you have candle bars.
Okay, I'm a little slow. So what did you just do? Because I got lines that are green on the outside and red on the inside. The candles are red on the inside.
Okay.
So one more time for the slow people.
No problem. On the bull candle, it's set to black right now. Default, you want to change that to lime, the same color as your bar up. And then on the bear candle, it's set as white. You want to change that to the same color as your bar down.
Got it.
All right, then just hit OK. That's all you would do to change the bars. Now to add your moving averages, at the top of the screen or at the top of the program, you've got to the far right, your last 3 toggle buttons or toggle switches. You've got a page with a plus. You've got something that looks like a clock, and then you've got like a little chart template thing. You want to use the page with the plus. Click on that. Scroll down to where it says trend. And click on moving average.
Okay.
Okay. This little moving average settings box is going to pop up. Under period, if it's a different number than 9, change it to 9.
Okay.
Under MA method, if it's set to simple or smoothed, change it to exponential.
Okay.
All right. And then you can, under style, the color of it, you can have it whatever color you want to. After that, you can either change the thickness of it if you want to, and then just hit OK. And it's got your first moving average. You're going to repeat that process again for the second one. So just go back up to the indicators list, but instead of going down to trend, the moving average is now going to the first selection because we already pressed it. So you just click right there. Now on this moving average, instead of the period of 9, you're going to do 18. Still going to
Wait a minute. I'm sorry. We supposed to do another moving average?
Yes, ma'am. You'll have 2 moving averages on your screen.
Okay. And so I just click it again and another one will pop up?
Yeah, go back up to indicators.
Okay.
And then click on the moving average.
Okay.
And then that box is going to pop up again.
Okay.
Where you had the 9 at under period, change that to 18.
Okay.
Change the color of it so that way it's not the same as your first line. What am I going to use? I'll use some off color.
Purple.
Yep, and then just hit OK. Now you've got your 2 moving averages.
Okay.
All right, you'll go to the indicators one more time. You'll go down to oscillators. And then it's right underneath the trend. Go down to oscillators.
Okay.
And then click on MACD.
Perfect.
Uh-huh. Just leave the MACD settings alone and just hit OK.
Okay. Ah.
All right. Now, to save this template, go back to where I showed you all those 3 toggle buttons to the right, the page with the plus, the clock, and then like the 2 little charts split in half.
Mm-hmm.
Click on the one that looks like the charts split in half and click on Save Template.
Okay.
You can save it and name it as whatever you want to.
Wallace, Celicia, I have 4. I don't know. When I clicked in here, I got the MACD, but I got the ADX, I got volumes, I got OBV 80, and how do I get rid of that before I save the chart?
Okay, so right click on your chart, go down to indicator list.
Wait a minute. Right click and indicator list.
Just click on it. Now,
yes, I clicked on it.
Yeah, and now it's going to pop up your indicator list for that chart. Whatever indicators you don't want up on there, just click on it, and then the edit and delete buttons are going to allow you to either edit it or delete it. Just click on delete.
Got it. Thank you.
No problem. All right. So once you all save your template or whatever, like I said, you can save it as whatever you want to. That's all you have to do. So now let's say if you want to look at a new pair, let me save this real quick. Example. But so let's say I open up a new chart, GU, just for the hell of it. Instead of, you know, having to right click to get the grid off of it, change all my buttons and things like that, all you have to do is go back up here to this template plate, go scroll down to whatever name you saved it as and just click on it, and it's going to automatically do everything for you. Y'all get
how do I change the color on the MACD? Because it I think I did something crazy on the color on the MACD.
Right click on it.
Okay. I see fast EMA 12.
Yeah. Go to colors.
Colors.
And it's going to give you a main or a signal, and that's really it.
Blue and red, like you got.
That's really it. Now this is another reason why I like TradingView over, you know, MetaTrader 4, because like their indicators, some of them you can't really mess around and customize them the way I really want them to. You see what I'm saying? You have to install a whole custom indicator to get it to do or look how you really want it to look. But this is really all you really need, guys, as far as indicators on your chart. You know, keep it simple. The moving averages are to help you follow the trend. Okay. But what I mean by that is, whenever you're looking at a fresh chart, you see the moving averages pointing in a direction and they're not flat like this. This is the direction you want to follow. So if you see like the bullish run right here, or the moving averages pointing up, you want to follow them and, you know, and look for buys. If you see the moving average pointing down like this, you're not going to place buys, you're going to look for sells. All right. And that's just helping you all, you know, understand the trending of the market and, you know, help you all, I guess, judge what's going on as far as what direction to place your order. Now, going back to the MACD, this indicator down here. The way I use this is, well, basically, let me go back and tell you what the MACD is for. The MACD is a convergence divergence indicator. Okay.
Can somebody mute their background so we can hear Wallace good?
Yeah, I got you. Yeah. If y'all have a question or anything like that, just unmute yourself. But I've got everybody muted for right now. So the way the MACD is used is the blue bars. They're telling you the momentum of a trend. Okay. They're telling you basically the momentum of a trend. If you ever see something like this, where the bars are getting higher and higher and higher, that means momentum is bullish. You're on a bullish run. Okay. And this is how I actually knew what UCAD was going to do the other day. Let me go back. Let me what am I looking for on here? There we go. Boom. All right. So let's see. Let's get this off. Last night. Was it last night or the day before? I think it was the day before. Well, no, it was last night. We was talking about, UK getting in short and things like that. And I was telling you guys, yeah, I wanted to get in short, but I'm not seeing the bearish momentum in order for me to get in short. And the reason why I said that is because once this move was made right here the other day, and then this move rejected it, that let me know right there that, the bulls was still in control, because not only did it hit a structure point, let me draw a line real quick. Not only did it hit the top of this structure point, it never broke it. It just bounced right off of it. And your moving averages are still slanted up as well. Now, on a normal situation, following the trade rules and things like that we use, yeah, we would take a short right there. Okay, which is perfectly fine. Like, we're not going to win every trade and things like that. But if you do just a little bit deeper digging and understanding of the market as far as like the date of things, we're at the end of the month, guys. Okay, not only that, we're almost at the end of the week. So instead of just focusing your attention to, like, the 1 hour and the 4 hour, or even just the daily, you have to click on what's relevant, which is going to be the new month tomorrow here at midnight. And then, of course, you're looking at the weekly chart as well, because those are going to give you the strongest signals or the strongest areas of support and resistance. They're going to give you the strongest trend. And as I said earlier, when you're looking at this MACD and you see the bars getting higher and higher than the previous one, that's telling you momentum is still bullish. Okay, so on the 1 hour and the 4 hour chart, if this is all you're seeing, this is going to look like it's a sell situation. Any other time, if it's like in the middle of the month or something like that, yeah, I'm taking this sell. You see what I'm saying? But I understood that we're about to enter a new month. So I have to look at my weekly and monthly charts so I can understand what's going on for the month coming and for the end of this month. You have to understand that we're at the end of this month, guys. Look at this candle right here. That's a nice bullish candle on a monthly chart. Not only that, here's that W. There's a lot of structure right here that price didn't break below in order to go short. Not only that, a trending market has higher lows and higher highs. From this move right here, all this is just a consolidation. Okay? So again, you want to follow momentum. We're on a bullish momentum right here. Here's the retest to this structure point that failed, it bounced away. If I was to draw a line right here and a line right here, this would be a bullish pennant or a bullish wedge, which is a technical analysis pattern of the market that says go long. Okay. So if we drop down to the weekly chart, again, like, this may be over y'all's head. Don't worry about that at the current moment, guys. I'm gonna break it down simpler for you. But notice though, this is on the weekly chart. Here's the pullbacks from this high. In order for it to get short, price would have had to break this low. Price never came near this low. Instead, you had to pull back, but these three candles closed above this structure right here. Let me draw a line.
Well, I'm a little confused only because it looks like is your dates off, like, because it says July 2017, or that doesn't matter?
No, I'm looking at the weekly chart.
Oh, okay, my fault.
Yeah, no, you're fine. This is on the weekly chart. So, this structure right here, like AC was saying earlier, he was looking for, you know, the M's and W's. This is a W right here, guys. So what I'm trying to tell you is the M's and W's don't just form at the highs and the lows. They will form within the consolidations themselves. And this is where a lot of people get bit at because they don't really understand that. And I'll show you. Well, actually, here's a consolidation where the market's moving sideways. But notice, double bottom. It set 2 lows right here, guys. And it bounced away. And that's why I think, you know, honestly, it'll go all the way up to about 157,500, honestly, because there's no signs of any kind of bearishness just yet. You see what I'm saying? Like, there's no red candles right here, guys. There's no wicks. There's no pullbacks. If you all look back at these same areas from this blue line to this blue line, if you all look at the price action of the candles, notice there's wicks right here. There's wicks. There's wicks towards the high. Wick right here, reversal. Wicks towards the high. You had that right here, but it failed. Ever since it failed right there, you don't see none of that. Even on the daily, here's your failure right here, right? You would have went, I would have went, well, a younger me probably would have went short right here because this was all I seen. And reading price action of the candles, yeah, you go short. And this is where, you know, having a couple of indicators actually helps you more than it does hurt you. Because again, look at your MACD at this point. These bars are getting higher and higher, telling you that the bulls are in control. Not only that, you've got this bull run right here that basically took out this high or this structure point. So now price is testing that to validate that. And as you see, price tested that area and then shot back up. And that's what I was looking at the other day when I was telling everybody, yeah, I want to get in short, but I'm just not seeing that momentum yet. And I'm going to show you all what I mean as far as like momentum changing. These bullish candles right here in relationship to the bearishness of them, they're killing the bearish. There's no pins to the high like over here. There's no short bodies of bullish candles like right here. There's no engulfing bearish candles over here at all. There's nothing like this. There's no strong conviction that says, hey, go bearish. Not only that, if you were just following the moving averages, look how they're pointing. And then add that again with your MACD, you would have went long and caught hella pips right there. Does that make sense? A little bit?
Yep. It always makes sense when you say it until I get by myself.
Oh, yeah. Yeah, trust me, like that just comes from, you know, just putting in your time, guys. Like, this is a skill that you're all actually learning. So you're going to have, you know, that doubt in you at first, but just you know, you're just going to have to, you know, trust your gut instinct. Always go with your gut instinct on this, guys. You know what I mean? And just follow the technicals. But yeah, that's why I wanted to go over the EuroCAD with you guys, because I know Stevenson had it short, which a lot of people had it short, and honestly, I don't blame them, because all the telltale signs as far as the trading plan and what we do and how we use the Fibonacci retracements, they're there. So, and what I mean by that, if I go to the 4 hour, let me see. All right. So let's say if I go to the 4 hour, right? I'm at the 4 hour. I see this top right here, and then this move. This is letting me know that, you know, there's a nice area of resistance right there. So when we see a move like this right here that comes back into the same zone, we're shorting that. Yeah, we may win a little bit, but the thing is, there's always going to be a retest, guys, to whatever higher low is moved away from. It may not happen immediately, but it always happens. Depending on when it happens, is letting you know the strength of that level. Okay. So for instance, this high was set, it moved away, set a low, went all the way up there. It broke this high right here. This move right here, this single move right here, basically, this single impulse move broke that high right here, guys. So once you see price basically break a high, you have to understand that this is going to be retested. And depending on the reaction or the result of this test, that's going to let you know whether to go long or short. Looking over here, I want you all to read the price action of the candles. When I say price action, I'm looking for the wick. I'm looking for the size of the candle's body. I'm looking for momentum change and things like that as far as like the candles. I'm not even looking at the indicators at the time when I'm talking about price action. I'm strictly talking about the candles. Let me remove these real quick. All right. I'm gonna put a line right here real quick. The area I was talking about is right here. Okay. If you all are unsure about what's a high or what's a good level, change your candle bars into a line. Because what happens is you'll see the test, another breakthrough with the test, shot up, another test, shot up, another test, shot up, another test, shot up. This is a descending triangle off a bullish run, okay? So that's another technical pattern. So what you have is you've got this level of about $1.500 or $1.50 that's being held, okay? But you're finding yourself having lower highs, but not lower lows technically. There's just finding support upon this same price level. So that's why it's still a bullish thing, because you're not making lower lows. You're just making lower highs that's finding support. So it shot back up. A long ass way. Let's see. Sheena, you got some questions?
I just want to be able to, I want to be able to draw, I guess the trend lines. I guess the market been so crazy that I don't know how to draw the Fibonacci and the trend lines. Like, okay. I want to be able to put it in there.
Okay.
Just like y'all do, you know what I'm saying?
Oh yeah. We gotta set your Fibonacci up actually, because
okay.
a few of the ratios that we use or the percentages that we use, they aren't default ratios, and I'm gonna tell you which ones. I don't even know if I have it set up on this one actually. Yeah. All right. Cool. All right. So as you all notice, I've got a TP1. I've got an 886, an optimal trade entry, and then another TP1 and TP2. The ones we're going to add would be the TP1-2 down below, the TP1 and 2 up above, the 886, and the optimal trade entry. To add these to your chart, guys, or to your fib tool, you have to draw a fib, right-click on it, and then go to fib or properties.
Wait. Draw a fib. Okay.
Yeah, just draw a fib on the chart. It doesn't really matter if it's correct or not. Just put a fib on your chart, right-click on it, and go to fib or properties. I'm going to show you all how to do it on the trading view as well.
Draw a Fibonacci retracement. Just hit it on there.
Yeah.
And then right-click and go to properties.
Yes, ma'am.
Only thing wait. This is the properties for the chart. Hold on. It's giving me the properties for the chart instead of the Fibonacci.
Okay. When you double click on your Fibonacci tool,
yeah,
you use your Fibonacci tool, you know that red line of the Fibonacci tool, that's where you actually have to click on it. I don't know if yours is red or not, but mine's red.
Can I delete it? It's yellow. Can I delete it and start over? Because I'm.
Yeah, you can delete and start over.
Let me see. How do I delete this shit?
Okay. Double click on it, just hit delete.
It ain't deleted.
You're on MetaTrader 4?
Yeah.
Yeah, okay.
Can I show you? Let me show you. Don't look at my place is a mess. Hold on.
I'm not worried about that.
Let me see if you can see some video.
Let me see real quick.
Okay. You see it's yellow. Let me see. You can't see nothing. Can you see anything?
I see your back. I don't see your chart just yet. There you go.
Okay. You see the chart?
Mm-hmm.
It's right by the lamp. Do you see?
Yeah. Okay. So draw your fib tool on your chart.
No, you don't see it. Okay. Hold on. Okay, let me hit it again. Okay, now I stretched it out.
All right.
The other one is just sitting there. Now I got a red line.
Yeah. Now you can just right click on that red line.
Okay. Now
Fib on properties.
there's nothing there. It keep bringing up the grid for the background. Why is it doing that? Fibo 8, 4, 8, 9, 10, and I'm right click, and it's just saying trading, depth, and market, one click trading, indicator list, object. That's what's coming up.
All right. Hold on. Watch my screen real quick.
Okay.
Hold on. I'm gonna show you exactly what to do. All right. You see my screen?
Yes.
All right. So when I click on my Fibble tool, I'm just gonna click, drag it out.
Yep, I got
It's supposed
that.
to be like that. Now you have to, I'm sorry, I skipped a step. You have to double click on it. Now when you double click on it, that red line is going to give you 3 dots, 3 white dots that lets you know that.
Oh, there we go.
And
3
then
dots came up.
Yeah, now you can right click on it.
Okay, okay. Now Fibbo properties is there. Okay.
Yes, ma'am.
Now it says name Fibbo 48910. Now what?
Just a second, hold on.
Okay.
All right. So what we're going to do is add a few of them. All right. So the 382, the first one you have is the 0 level. The second would be the 382 level. The third would be the 50% level. The fourth would be the 618 level. And then you have the 100% level, right?
Okay, with the first one is 0.1, 0.0. We're gonna add that to nothing.
No, we're not going to add it. Those are the defaults. You already have. Okay.
No, mine. Okay, yeah, mine says 23.6.
You can delete that one. Yeah, you can delete that one. Yeah, just highlight it and then hit delete.
Got it. Then it says 50, 61.8, and 100, right?
Right, and you have the 382, right?
Yes, 382. Yes.
All right, cool. Now here's what we're going to add. The first one you're going to add would be. Here's how you add them. You basically click on add.
Okay.
Under level, you want to type in 1.618.
1.618. Gotcha.
Under description, you're going to write TP2.
TP2. Okay.
And then
sorry to interrupt, but can you scroll back up to the top again? Like the scroll bar, yeah. So you got 0 and then you got 382, 382, 05.
Yeah, the first ones are all the defaults. And the only thing I just did was remove the 283. I mean the 238.
Yeah, I removed that one too. And then it's 1 and 100. And then 168 and 168 and TP goes right here. Okay.
Right.
Okay.
So it's 1.618 under the level, and under description you're going to write TP2. That's your take profit 2 level. All right. Hit add again.
Okay.
you can type in negative 1.618, and that's still going to be TP2. All right.
Mhm.
I don't know why I have that as a 889. All right. The next one would be add 0.89.
0.89.
And then under description, you can just write 89.
89.
Hit add again.
Add.
Type in negative 1.27.
1.27.
Description is TP1 for take profit 1.
P1. Okay.
Hit add again.
Okay.
Type in 0.79.
0.79.
Under description, you can type in OTE or you can put whatever you want to. Basically, the 0.79 is your optimal trade entry. All right. Then you're going to hit add one more time.
Mm-hmm.
And then do 1.27 and then TP1. Once you have all those in, all you got to do is just hit OK. Then you can delete the current Fibonacci tool that you have and just draw a new one just to make sure that all your levels are on there.
Yeah, so mine is not on there because I could not add descriptions while you were going for some reason.
Oh.
It let me add the levels,
but
and
you don't really know which one they are.
Right, it's like it let me add the levels in there, and then when I went to tab over in the description, I couldn't do it.
Oh, yeah, you got to double click on it. Let me pull it back up for you. Which ones do you need? All of them?
All right. Wait a minute. Go back to the first one. So I got 0, 0. I got 382. I got the 50. I got the 61.8. And then this next one is 100, 1 and 100.0. And then what's after that? 168 TP2. Then
it's 1.618.
1.618 in TP2.
Yep.
And then the next one after that is what?
A negative 1.618 TP2.
Negative. Oops. Oh yeah. Okay. Okay. And what's after that one?
0.89.
Sorry, y'all, for making y'all have to go through this. 0.89, and that's 89 on that side.
Right.
Okay. And anything after that one?
Yep. And then you type in negative 1.27.
Oh, wait a minute.
What's up, babe?
Oh, God. Negative 1.27.
Huh?
And TP1.
I'm doing this webinar.
And then
Can I call you back when I get done?
Yeah.
All right.
OTA. What's in that level with the OTA? 0.79.
Yep. 0.79.
All right. And anything after that?
Yeah, 1.27, and that's TP1.
I feel like I wrote that already. TP1.
You probably did the negative one, yeah.
1. Okay, I think I'm straight now.
Yep, and then just hit OK.
Yep, I did that. Thanks.
All right, now I want to show you the really cool things about these key levels, those Fibonacci levels and retracements. Let me find something. So with the retracement tool, each retracement level, as I mentioned the other day or the other night, each retracement level has its characteristics as far as the reaction after that level's reached. And what I mean by that is like the aggressiveness of the move or the quickness of the move. So for instance, a 382 retracement, let me see if I can find a nice one on the 1 hour. Oh, I hate this. All right. So from this low to this high, this retracement right here, I believe to be a 382 retracement. And if you notice, the move after that was fairly steep. It wasn't really slow. It was just aggressive. You know, it consolidated until it needed to move, but that move was aggressive. Let me see real quick. Yeah. So here's your 382 retracement. And anytime the market retraces to the 382 and you find it struggling to go any kind of lower, look left to trade right. And what I mean by that is you're going to look left on the chart for previous structure points. All right. So if you notice, here's a structure low, or here's a structure point, here's a structure point, structure point, structure point, structure point. So you're looking left at the previous history of the currency there to see how it reacted at that same price level or that same area of structure. Now, since these candles are closing above that same area of structure, you're automatically thinking long. Not only that, is anytime you see a move like this or a trend like this, just know, like I mentioned earlier, that this low is going to be tested. It may not happen immediately, but this high, since we're on a bullish run, just know that this high is definitely going to be tested somewhere in the immediate future. Now, it may happen, 12 hours from then, but it's going to happen, is what I'm telling you. And sure enough, it bounces up to test this, and it breaks through it. Let me see if I can find you all a slower one.
Yeah, because how did you know where to stop your fib tool on the first line?
Right.
Like the highest one, because I thought you guys were fibbing from a low to a high, but you didn't go all the way up.
No, I didn't. The reason is because anytime you have to understand like what is an impulse move versus what's a retracement. This whole move right here is an impulse move. So this is your low and this is your high. That's signified by this nice strong bearish move, but it's not strong enough to take out this low or this low. So this is just an inside return to this whole run right here. So that's how we know the fib. The next, let's say, for instance, on something like this, you would go from this high. Well, if this was all you could see, you're going to fib from this high, from this low to this high to figure out where the market is going to retrace for this move right here. Does that make sense?
Yep.
All right. You say no?
Yeah, I still don't understand where to put my fib.
Okay. Let me explain it this way then. Let me go to the current market. All right. So for instance, on this move right here.
So I need to be putting this always on a H. You on a H1, right?
No, you don't always put on the H. It depends on what kind of trader you are. If you're a scalper, you're going to do this on, I would say, the H1 or the M5. The M15, the minute 15. If you're a swing trader, you're going to do it on the 4 hour. You can honestly do it on all the charts, and I'm gonna get to that here in a second. But for now, you're going to look at your main chart as where you're going to use it on the main chart where you gather most of your analysis from. You see what I'm saying?
Mm-hmm.
So since, okay.
Delete this chart. This Fibonacci is a mess. I get a mess.
Oh, it's tough. But for the Fibonacci tool, you really want to just basically draw it on a bullish run. You want to click, your first click point is going to be the low. Your next click point is going to be the high. Now, here's how you know what's a low and high on a trend. This is a low point. This is a high point. Once the market starts to move sideways or shift away from it, that signifies a swing point.
Okay, so that's where you reposition at low and high.
Right, you're gonna. That's where you position your fibs at. Is at the low and the high points. If you're having a hard time finding your swing points or identifying your swing points, there's an indicator under. If you go back up here to your indicators, scroll down to custom, and you're gonna go to. Oh, actually, hold on. It's under. It's under Bill Williams. I'm sorry. Go down to Bill Williams.
Okay.
Click on fractals. And just hit OK.
Okay.
Now, it may look like it's a lot on there right now, which they are, but what each of these arrows are signifying is a swing point. Okay? Now, we don't use all these swing points, no, but they're telling you the swing point. So, like I said, on this move right here, if you had a hard time, knowing where to anchor your fib tool, you would just do it from this point and then go to one of these highs. And it's going to give you an inside return. Now notice this is already rejecting at the 382 and it doesn't look like it wants to go too much lower just yet because the momentum isn't there just yet. You see what I'm saying? It's just moving sideways and it's not passing this low. So until it passes this low, you're still long. Until it passes this low, the longer term trend is still long. Now it can retrace as deep as to 100% and still be valid as going long. Because
long is buy, y'all. Short is a sell.
Yeah, sorry about that. Long is buy, short is sell. I'm sorry about that. But as I said, until structure is broken, guys, you're still going to be valid in the predominant trend, basically. And that's what you all have to realize. Okay? Unless structure is broken, go with the trend. So until this structure is broken, or actually, I'll go to 4 hour with a swing trade.
Is those pivot points on the top of your wicks?
Those are fractals. They signify swing points. That's just something that it's like a little cheat code, like for newbies who don't really know what a swing point is or where to anchor anything. That's all they are. I'll delete that indicator real quick. But as I was saying, so this is from this consolidation. Let me go back to 1 hour. So basically from this consolidation, you've got a move down. Once this low is set and it shifts away, you can know that this is a low point. When it shifts away from that point and starts to move sideways, or you see price move within it for a period of time for more than, let's say, more than 2 candles, 1 or 2 candles, then you know that, hey, it's in a consolidation, and that's a retracement. Even though the market is moving sideways, guys, this is still a retracement within this trend right here. Okay? It just may not be a steep or a deep retracement. It's still a retracement. But this bad boy, Euro CAD. So let's say I was going to enter on UCAD, right? Euro CAD. I would have my key levels marked up on here from the weekly and monthly. I would have done my analysis on the daily chart as far as looking at my moving averages. Ooh, excuse me. Looking at the MACD, looking for any kind of divergence or anything like that once you all get deeper into trading and things like that. But we're not going to get into divergence just yet. Like, that's some good stuff that I help y'all enter, but I'm not going to cover that just yet. Y'all have any questions so far?
I don't. I'm just saying how you market your chart. I see. I didn't know you could really I didn't know you could change the numbers on the fib. I thought what it was is what they gave you.
Oh no, man. See, that's there's a lot of little tips and tricks that I'll be able to show you all over the next few weeks to a few months, man. Honestly, that's going to take your trading to the next level. But like I said, this is a skill set, guys. Give yourself some time. Understand that this is it takes some patience. Okay. So don't.
I've been patient with Forex, man. I've been off and on with it for the past 3 years. I've been trying to figure this crap out.
Yeah, bro. It's just there's a lot of information out there, which it's a lot of good information out there that's misapplied, I should say. Put it like that.
Yeah. Yeah.
So let's see. Hold on, I think I got a chat.
Like I was trying to figure it out all kind of ways. Like I did the pivot points. I used the ADRs. I try to use the TDIs. I try to use all type of indicators.
I mean, like when I first started trading, man, I had a nice little system called Luciano theory or whatever, which it had like 5 moving averages in the TDI and a couple of deviation dots. And I originally told people, hey, those indicators are like training wheels. Okay, like eventually you want to shed them off, to like just a couple, and that's really all you need. You know what I mean? Couple moving averages and a nice oscillator, something that's going to tell you, or a nice volume indicator, and that's really it. I'm trying to figure out what to really go over with you guys tonight.
I like the ADI because it tells you the spread.
Right, the ADR will tell you exactly. Yeah. It's going to give you the average directional range as well. So it's a great tool as well.
I use that. I just only use that to count the spread.
Mm-hmm.
Yeah, when I get back to Dallas, man, I gotta get my laptop.
Yeah, you do.
Bring it. I'm gonna bring it with me on the road and try to find some Wi-Fi.
Just get your little hotspot, man, on your phone.
The phone ain't the problem. It's gonna be my laptop.
Yeah, you're cutting in and out right now. Hey, Sheena.
Yeah, I have one more question, and I'm going to let you go because I appreciate your time.
I was going to ask you if you had any more questions.
Yeah, I do. One more question.
Mm-hmm.
All right. So I know when I'm drawing my lines, right? I can't get this. I need to delete this dang Fibonacci thing off. I'm right clicking it, but it won't go off.
You gotta double click on it to select it first. Make sure those dots are on that red line.
Oh, that's right. Okay, it's gone now. Perfect. See, that's a question I need to answer. Okay. So this is the second thing. When I'm drawing my like an ascending triangle or whatever that is. I take this 1, 2, 3. This vertical line. Draw a vertical line. Right?
No.
I mean, not a vertical line. Horizontal line.
Yeah, draw your horizontal line on your triangles.
Yeah, but where? Where do I start?
Let me find a triangle real quick.
Yeah, I can't see flags. I can't see them.
Yeah, it takes a while for your eyes to honestly recognize things, but I'll show you something. Let me see if I can find a flag.
Okay, maybe on Euro JPY, the 24th of November.
Hold on. Oops. Dang. Oh yeah, this was one of my trades I took. This is an old one right here. I think I went over this trade with you guys. Didn't I?
No, not me.
Not you all. This was a trade I had took a few weeks ago. A couple weeks ago, I believe. Might have been last week when I did that first webinar for the people in the group. But yeah, this is what I looked at. That's crazy. So you said Euro, Japanese yen on what date?
The 24th of November on the hour chart. Euro JPY H1 November 24th.
Let me see if I can find it. Oh, matter of fact, this is the flag right here.
Is that on an hour?
Yeah, this is on an hour right here. This is October 27th area. It's a
I
small.
can see that's a flag.
Okay, let me draw this line real quick.
So the flag is like a V going into a triangle?
Yeah, it's a triangle. Or
Okay.
I guess I should call it a pennant. I'm sorry.
Okay.
You see all this right here?
Yep.
Okay. So, well, actually, I didn't even. Well, I guess, yeah. This is a pennant right here. Okay. The reason why it's a pennant is because it makes the triangle off of this bearish run. This is a bearish pennant. So if you see this momentum right here and it enters a consolidation on this pennant right here, just know that that's a bearish pennant. Even if it shoots up a little bit, it's not going to take out this high. It's going to bust back down.
Really?
Mm-hmm. There's a pennant, there's a flag, and a wedge. People call this a pennant or a wedge. Whatever you want to call it, it's basically your preference. It means the same thing, basically.
I just call it the triangle.
Yeah, yeah, that works too.
I usually use squares.
You use squares on those? I'm gonna try to find a flag. A flag is where I would use a square. Let me.
It gotta be in a slant for you to draw.
It's gotta be in a slant for me to draw it as a flag. No.
Yeah.
It can be a flag. Can be a sideways consolidation as well. Let me see. Actually, let me show you one. So a flag will have two parallel lines. Basically, it would create like a channel. Damn, where'd you go? This isn't the best flag, but that's a flag. Here's your pole. Here's your flag. It creates like a little channel.
I get it.
And that's why they call it a flag. This is the bullish flag. It's not necessarily a wedge or a pennant because you've got this, it's just like parallel. The lows and highs are parallel to each other, basically.
The lows and highs have to be parallel, and it has to be going downwards in order for it to be a...
No, it doesn't have to be going downwards. I mean, like those, the lows and highs, they can be moving sideways. They can slant a little bit, but as long as it's not a pennant, then it's a flag basically.
And so that would tell you to buy when a flag is coming?
Depending on the previous momentum that led into the flag or the structure. So for instance, had this been a bearish flag, I would have still went short. But instead, this was a bullish momentum that entered into it. So you still went long. Because all the flag and pennant and the wedges are just, they're just a consolidation pattern. You see what I'm saying?
Mm-hmm.
So when it's done with that consolidation, it's going to continue the same way that it entered. More times than not.
All right.
That's somebody.
Hey, I taught you something new tonight, my man. I'm proud. That's my goal, man, to teach people new shit.
For real.
Love it.
You know what? Let me tell you, I've been trading for 2 years. And I never could get anybody to sit down with me and just do the simple things with charts. Nobody just would take the time to pay somebody to do anything with me. So I'm grateful.
It was like that with me too. Me too. I was pretty much on myself.
Y'all
Yeah,
don't know about Ward 3, do
Trying to
you?
figure out everything on my own.
yeah.
Y'all don't know about Ward 3, do you?
About what?
About my company, Ward 3.
No.
Oh,
No.
okay. Well, put it like this, man. I pretty much sparked the Forex movement into the Facebook niche, like 4 or 5 years ago with Ward 3.
Really?
Yeah.
Okay.
Put it like this. I had the Fit Boys in there. I had Elevated Trading Boys in there. I had basically everybody you all know on Facebook who trades right now got their ID or their start from Ward 3 pretty much.
Shut up.
Okay.
You was with Forever Profit too?
Forever and Profit came from me. Forever and
Oh,
Profit, put it like this. I was trying to train them to be my trainers because Ward 3 had got so big.
wow.
Yeah, like if you all go click on my hashtag W3A and scroll back, you'll see Quillen's post, you'll see Ryan's post, you'll see all kind of people post, man, from Ward 3 from when I was teaching. Like I was doing London sessions. Like this was before IML. Like Christopher Terry was in Ward 3, like watching me teach people, and like he loved it. And then Garrett was my partner, so we kind of like reached out to him, and he reached out to us, and kind of helped him boom out IML. And that's really what happened.
Mm-hmm.
But yeah, man, I've been doing this for a while now. I got some experience.
I appreciate it. I wish you could have saved me $1,000 if I had listened to you last night. I would have saved. No, you could have saved me at least $1,400.
See, I was trying to tell people, man. I didn't see no bearishness just yet.
Damn, I should have listened.
Yeah.
All right, I'm listening now. Don't worry.
It's just a learning curve. I promise you. It's just all a learning thing. So, I mean, and the best teacher is always, experience and mistakes.
Experience.
Yeah. I wouldn't go join IML at first because I was like, oh man, I'd be bothered with the rooting part,
Oh man.
But then,
shoot, I'm not even bothered with the recruiting.
I just want to learn how to trade. I'm not really bothered. So that's at first.
Exactly.
And then when Jerry asked me again this year, he was like, because I had took time off from trading. I think last time I traded was like in March, so I took time off. So he asked me, well, won't you join this? And I'm like, man, I don't have the money to be given to be learning the same stuff that I already know.
Right.
And he was like, man, trust me, bro, they got a lot of information. So I gave it a shot.
Shit, man, stick with it because, like I said, go through the IML Academy. Like, there's a lot of stuff in there that we actually teach already. Not only that, just my biggest advice to you guys as far as trading is just to have some patience and don't be so eager to enter. Okay, if you all ever see a move, just always know before that move is validated, there's going to be some type of retest to it. Let me show you real quick what I mean by that. Hold on. All right. So, for instance, in order for me to enter on this short right here, what I have to see is the retest to this high fail. So I'm not going to necessarily enter just because I see it short right here, because there's always a retest, as I said earlier. And if you notice, the retest never failed. So you're still going to be long.
Right.
So let's say if you see this pullback against the trend, you're more than welcome to catch that buy all the way to this first structure point, and then to read the price action of the candles or to monitor it to see if there's going to be some kind of conviction or rejection at that point. But there never was. So you would have still had your order open and then won all this as well. Not only that, you're following the main trend anyway. You're not looking for the tops and the bottoms. That's another thing I had mentioned earlier. Don't try to identify the M's and the W's. You'll end up losing way more than winning, because the M's and W's, they happen all over the chart. For instance, you would think this is a W, right? But you have to understand, if you drew your trend line, you're in a retracement on this move right here. And sure enough, you know, boom, it retraced, even overshot a little bit. But this move right here pulled it right back into the structure area. And then with that drift down, guess what? If you all thought you missed the buy right here, remember me telling you those swing points are always retested. And let me show you the thing about these swing points. And this is why we use the Fibonacci retracement tool. Because if we see this move, and we missed it, but we see it's entering a retrace, we're going to draw that fib right there, and we're going to wait until it enters in between the 618 and the 886. And sure enough, most of the time our pending orders are in between the 618 and the 786, and they get activated. Your stop loss is all the way below this structure point right here, so you're not really in too much drawdown, and you're not in trouble of getting stopped out. If it retraces all the way more than the 100 percentile level, 9 times out of 10 it's going to keep going. So your stop loss was valid anyway. You're good. You saved yourself. You see what I mean?
Yeah.
But don't ever think you missed the move, because like I said, it's always going to be retraced and retested at some point in the future. It may not happen immediately.
All right.
It may take a little second, but it's definitely going to retrace.
All right. So how many times?
Go ahead.
How many times does it have to hit the retrace before you could tell? Like I was looking at it. It hit the high twice before it kept going. Like for example, you see towards the end of the structure.
Right here.
See where it hit that point? Yeah, right there.
Right here.
Yeah, right there.
Yeah. It hit
it twice.
Yeah, it hit this high right here. Then it hit it again. But
sometimes it sells. But
yeah, like I'm gonna tell you, this would have been a valid sell. But notice though, as far as, let me go to my arrow. I don't like that cross. As far as the structure, I'm gonna highlight some things for you all.
You can't use the fib on a mobile, huh?
Hold on real quick. I think my pig's stuck in the bathroom. There you go. She was sitting there crying in the bathroom.
Let me see your pig. I want to see him.
You want to see her? Hold on real quick.
Yeah. I'm sorry, AC. I just want to see it.
Hold on real quick. She might scream though.
Oh, I forgot you recording. You recording.
I know. Here's the pig.
Oh my God.
She's a big baby.
Oh my goodness.
She's only 6 months old.
Oh man, so she gonna get bigger.
Not too much bigger. Probably about 50, 60 pounds.
What made you decide to get a pig for a pet?
It was my girlfriend's idea, actually.
Are y'all by a farm or something?
No, we're not. We're actually in the fucking city, man.
No way.
Yeah, it's crazy.
Okay.
But, let me show you this structure, the structure point real quick. Y'all see the screen?
Mm-hmm.
All right. So this is where knowing what structure is and market structure and how to use it comes in handy. Because if you notice, here's the high, here's the high. If this move right here, had it dropped below and closed below this structure point and this structure point, then yeah, I would have considered going short. But notice, as I said, after each swing point is made, it's got to be retested. Look at this single candle right here with this long wick. Now that's a major telltale sign that price is not going down.
It failed.
Exactly. And if you notice, where did this candle close?
I saw that.
In relationship to this structure and this structure? It closed above it.
Wait.
I saw that this morning.
I can't see that. I can't see that.
I seen that this morning. The exact same thing this morning. It was in Euro and AUD.
Yeah, Euro I did. Yep, you're exactly right.
It did that early this morning, around 5 or 6 o'clock.
Yep. So
This
like
doji?
I sold
you
and I
sold,
lost.
yeah,
And I
you
lost.
sold,
Yep.
and it pulled back, and
It pulled back and it kept going up. Yep. I
yes,
lost
sir.
it in that
Yeah, the
very way.
doji, the long candle gives an indication that it doesn't want to go down. So let's go up. The
Exactly.
price don't want to go down.
Exactly. The wicks are telltale signs of price exhaustion, depending on where they are. Okay. And what I mean by that is you have to use these candles and these wicks with price structure, previous price structure. If this is happening within a trend, it's just part of the trend, especially on dojis. But yeah, that's pretty much what told me to on EuroCAD. EuroCAD did the same similar move, and that's what actually told me another telltale sign that hey, it was still going to go long. It did it a couple times. It did it right here, and it did it right here.
So what do you think Euro JPY about to do now?
Let's see. Like I said, I'm gonna go to my monthly and weekly charts, and honestly, it's still bumping up.
You think it's gonna go up instead of down?
Yeah, it's still long until you see some kind of strong bearishness move that breaks all this right here and starts to see this area or this area. You're still long. I'm still long again because it's closing above this weekly level.
Man, you don't understand. Only if you knew, dog. Like
Not
when I
only
was trying to when I was trying to get this support and resistance stuff down, man, like this price action stuff, man. I bought books. I got like books on price action, like trying to figure this stuff out.
oh
Like
man.
that was information I did not know that it is still a buy if it doesn't pass that second wave, that second
Yeah.
level.
Until market structure's broken, you're still in that trend, in the predominant trend.
Man,
That's
you
something
teach
that
me
you
how to read
always
the
have to
chart,
remember.
man.
What'd you say?
I said you like I'm learning how to read this chart, man. Like it's like the key to the city.
Oh hell yeah! Like once you learn how to read this stuff, bro, it's almost like man.
It's like you're teaching me right now, like the very last piece to the puzzle.
Exactly. You're exactly right. And like I said, this is just like a sideways consolidation. You've got these lows which are all still rejecting above that same structure point, which is right here. All this, these highs right here, those are letting you know that this price line, the 131 area, is sensitive. It was rejecting, the bounce off, the bounce off. Now it broke through right here. It's using that same area as support now. So you just have to know, just know market structure. And that's really about it. And, a little bit of price action of the candles and you'll be good. Like, honestly, it's Forex trading, understanding it and learning it is the simple part. Implementing it is the hard part. That's the thing.
Yeah, putting it into action. Yeah. I can learn a million things and still do basic stuff.
Yep. It just takes you some time. Honestly, what I would recommend is even if you're not going to trade, I would still just drop down to the 1 minute chart and just watch. And the reason why I say just drop down to the 1 minute chart and watch is because the same cycle happens on all the time frames, regardless if it's the daily, the monthly, the weekly, the 4 hour.
Okay, so they all gonna do the same stuff, same spot. It just regardless if it's the hourly.
Right. And what I mean by that is it's the higher the time frame, the longer it takes to play out, basically.
Right.
So the 1 minute is going to give you like a super quick view of what the market does all day, every day.
So, okay. And see, I was doing it backwards. See, I would look at the higher time frame and trade low.
No. I'm not telling you to trade off the 1 minute. I'm telling you to just watch it to learn how the market moves.
Okay, all right.
You see what I'm saying? Because
Yeah, I got you.
these same patterns, these same formations, they're going to happen on the 1 minute chart, and you're going to be able to see, you know, how it plays out at
Oh, all right, I got
time
what you're saying.
in relationship to, like, you know, watching it on the 1 hour for that same pattern to form. You see what I'm saying?
Right.
That's just going to give you all, I guess, some familiarity as far as to what you're exactly looking for in certain situations and scenarios. For instance, like if this was the 1 minute chart, when you see the price approaching the line, you're going to be, you know, honed in to watch how those candles are reacting to this price level. And then what happens is, after seeing it time and time again, your brain memorizes that. Okay. And so, like,
Right.
when you see it happening again, you become more confident in entering the market based off what you saw in the past. So that's why I recommend, you know, even just get you all at least, you know, 10 to 15 minutes of some kind of 1 minute chart action when you're beginning to trade. So that way you can just become familiar with how the market's moving and things like that.
Okay, that's what I can do on my spare time when I'm just looking.
Mm-hmm.
You said get you some 1 minute. Do what again?
Just get you some 1 minute chart time. Just watch the 1 minute chart, because like I said, when I say there's cycles within cycles, what that means is the cycle's going to play out on every chart.
Mm.
Okay, it's just the higher the time frame, the longer it takes to play out. That's all it is.
And somebody told me that before. Somebody told me that, I said, a couple of years ago, they were like the same moves happen single.
Yeah, move. I mean, the cycle is the same cycle on every chart. Like, I can teach you all the cycle, and you all can see it, and I can teach you all the cycle on a blank chart, and not even put like a daily, minute, or 15, you know, a time frame to it. And once you all see it and understand it, you're gonna see it on all the charts.
Yeah.
It just takes longer to play out. That's all.
Yeah.
The higher the time frame. Cool beans.
Yeah, you gotta
Yes.
do a
Thank you. I
class on
appreciate
that
your
one
time.
day.
Oh no, man! I'm trying to tell you, bro. I got. Man, I done did so many training courses. I done did the Astro FX course, Steve Morrow course, the Inner Circle Trader course. I done watched Akil Stokes. I mean, I done did Jason Stapleton. Like, there's all kind of training out there that I've read through, watched videos, and all kind of stuff. And honestly, the majority of it is understanding price action, support, resistance, and what the market is doing as far as whether it's trending or it's in a consolidation. That's all the market is. The market seeks out support, resistance, and once it finds a nice strong one, it's either going to bounce off or break through. If you know how to read the price action, then you'll understand that it's going to bounce off or break through.
Yeah.
Yeah, I got a price action book right now that I just bought called Indicators Are for Suckers or something like that.
Have you read the Naked Trading book?
Yeah, I read that book.
Read that?
Yeah,
Another book. Have you read Trading for a Living, Volume 2?
No, I haven't read
No,
that
I
one.
haven't.
That is one I would highly recommend. Because
Trading what?
Trading for a Living, Part 2.
Oh, okay.
All right, it's going to give you some nuggets. All right, a lot of nuggets as far as a few different indicators that, you know, might work for you. Understanding the market a little bit better, and it's going to give you a triple screen. Now, the triple screen is a method that involves using 3 charts on the same currency pair with a few different indicators. So you would use the same moving averages and the MACD on your higher time frames, but you would use these same moving averages and say like a stochastic or the RSI on like the lower time frames. And the way you would use it is like you would do a 3 chart step down. So for you scalping, like I said, you would go from the 4 hour down to the 1 hour down to the 15. And basically what happens is between the MACD and the RSI, they're telling you different things. The MACD is going to give you the momentum, as I said earlier, but the RSI is telling you where the market is and within the cycle, whether it's overbought or oversold. Now, let's say the MACD is showing you a bullish momentum or a bullish run, and the RSI is telling you that the current price or the currency is oversold. That's what you want to see for your buy situation. And it goes on. It's a lot deeper than that, but it just basically tells you a nice little system, and it's kind of the system that I use, honestly, to help you trade. But yeah, get that book. Actually, I've got the ebook of it. I can post it if y'all want it.
Please, yeah, I love that.
No doubt.
Yeah, I'll read it.
I can post that, and yeah, I'll post that. Actually, I'll give it to you all as soon as we get off the call.
Okay, thank you.
Okay.
I think I can find Naked Trader to post. I had to find. I think I got that.
Let's see. I mean, I've got a shit ton of training to post. Honestly, I just haven't.
Yeah, I got a lot of books too.
Like, it's a lot out there, guys. But
Thank you.
Oh, it's no
Yeah,
problem.
I appreciate this call, man.
No problem. This was recorded. Like I said, it might be a little bit lengthy, but you all can, of course, go back and rewatch and study and things like that. But
well, it'd be easy to watch this one because I was actually in it.
Yeah.
So once you in, it's easier to watch because you already went through it.
You're exactly right. Right. But I'm gonna do another training this Saturday. Saturday nights is usually when I release like some more training, some updates, and some tips and things like that. Me and Dwayne.
Yeah, I'm gonna have my laptop then.
Yeah, that's what's up. And then like throughout the week, I'm gonna try to start doing some more of these little hangouts just to help you all, learn a little bit faster and so forth. But
will you make sure you record them as well?
Oh yeah.
I would really appreciate it, man.
No doubt. But y'all got any more other questions?
That's it. Thank you.
That's it,
all
man.
All right, now. Hey, y'all have a good night.
You too.
You too. Thanks.
All right, no
Bye.
problem.
You too. Thank you, man.
No problem.
All right.